Hello, everyone. Thank you for joining us at this Your Overseas Home webinar. My name is Christopher Nye, Senior Editor at Your Overseas Home and Portugal Property Guides. Today, we'll be chatting with Phil Morris from Chase Buchanan about your financial considerations to be thinking about when you're moving to Portugal, or indeed buying a holiday home there, because some of the same things will apply. It's great to have you all with us, whether you are live or catching up on demand. We only have 30 minutes, so we'll get on. If you have any questions, please type your query into the questions tab on the right-hand side of your screen. And if you need a reminder of anything discussed today or want to share this with family or friends, a replay will also be available on the Your Overseas Home website to watch at your leisure. Now, Phil, firstly, thank you for joining us, because I know you're suffering at the moment from flu, proper flu. It would be, however, if you can, it would be great if you could please start by giving us a quick summary as to who you are and how Chase Buchanan can help out our viewers today. And you have a bit of a presentation there, and then we'll get on to some questions. So over to you, Phil.
Thank you, Chris. So I'm Phil Morris. I'm a UK qualified financial advisor, or IFA as we're otherwise known, independent financial advisor. And Chase Buchanan is a cross-border financial advisory with roots going back in excess of 20 years. Originally a UK business and has projected out across the main, let's say, retiree hotspots on the continent of the EU. But we do also have offices in Canada and in the US. So yeah, today's seminar is really obviously focusing on Portugal, and as the title there indicates, financial considerations and taxes, and particularly including pensions, but particularly when buying homes in Portugal. Without further ado, hopefully my slide will move. Hold on.
Is it not moving? How about I try? There you go.
Yeah, there we are. It's funny, it was working before and now it isn't. Anyway, bear with us. So yeah, first and foremost, if you are looking around at perhaps other countries, and obviously a popular alternative destination might be Spain, you would find perhaps a lot of information on the internet about Spain's wealth tax. And I'm here to tell you that Portugal does not have a wealth tax. So that's the first good thing. So, one of the reasons you can give yourself a pat on the back, if you like, if you've already made a decision for Portugal rather than other places. But also I'm going to touch on, the implications of Brexit and essentially the changes that have meant it a little bit more complex to move here and indeed travel here, whether you buy a home or not. You're still subject to what's known as now the Schengen 90-day rule. That means that you are allowed to come here or any other place in the Schengen visa area for 90 days in any 180 days. And that's not like a fixed thing. And obviously, if you convert it into months for easy conversation, you can't just come for 3 months and every 6 months, and at the end of that 6 months, sort of flagpole, go back to the UK for a couple of days, or your home country, and then return. It's a flux, sort of rotating system. There are some handy reckoners online where you can put travel dates in, historic ones and potential future ones. So this is a serious consideration. My spies and sources here tell me that it isn't being aggressively enforced by Portugal at the moment. And it's likely to remain that way for the rest of this year. Where people have come unstuck is they perhaps transited through a third country, such as Germany, and Germany have held Brits to the letter of the law and they've got into trouble for exceeding that time. Now, so bear that in mind. I will go on to what we need to do if we are indeed moving here with, two boots and effectively leaving the UK and moving here on a permanent basis. But what else should you be doing when you're considering, buying a home here and moving here? Internet research I've touched on, but obviously webinars such as this one. And I have to say this is one of the best, and I would say that, but obviously there are others. You're going to do scouting trips, obviously with the aid of your overseas home. You perhaps are doing property buying trips and such. But during that time, I'd urge you to perhaps make contact and establish some initial relationships with, local lawyers, accountants, and again, financial advisors, of course. We definitely are worth talking to when it comes to Portugal. So point 7 there, you've purchased your property. There are things, we're going to come on to residential visas. You can obtain that visa by renting for a year and then taking time to pursue your property purchase whilst being officially resident. But I would say as well, on one of your visits here, you can do this online. Get your NIF, which is your tax number. If you like, you could liken it to your national insurance number in the UK. I note from doing your overseas home webinar last time, there were a number of Americans listening, and I apologize in advance, this is quite UK centric, but that NIF would be equivalent to your social security number. Also, whilst you're here, it probably is easier to open yourself up a Portuguese bank account. I think could you move the slides, Chris, again? I think for some reason that feature has stopped working today.
There we go.
There we go. So if we are buying, these are the considerations, the 3-letter word that perhaps should be a 4-letter word: tax on your purchase. You've got a sales tax, or rather a purchase tax, IMT, and that's property value dependent. Stamp duty, legal fees, you can budget around 1 to 1.5%. Flat registration fee of €950. You shouldn't be paying an estate agent fee for purchase. So budgeting on an approximate 6%, you'll be there or thereabouts. Next slide. There we go. What are we thinking? Again, apologies to Americans, but a lot of this is relevant. UK is a third country, as is the US and other countries now. So we are thinking of coming here. Do we put our main current UK home on the market or rent it out? Now, there are advantages to selling it immediately, and that is that because it is your main home, you would not have a capital gains tax to pay to the UK. Once you start renting it out, it's treated rather differently, and you would stop that capital gains element being an advantage. You would start sort of acquiring an exposure in capital gains of that property. So I mentioned about, we can come here and visit, but if you are buying and if you're seriously making a decision to make Portugal your new home, then, and we didn't want to be subject to the 90-day visits in every 180, then we're looking at residency visas now. So just as a little bit of history, up until December 2020, you could have walked into the town hall as an EU passport holder and declared yourself resident and paid €20, and that's it. that is no longer the case. So we are now in a situation where a visa is required. Typically, the route would be D7. It's called a D7 visa, and that's dependent on proving a passive income. And it can be also, if you've got a remote employment, they want to see that you've got some income coming in to support yourself. So that's typically the one that, our listeners, you are probably going to go down that route. So it is a process. It is a process that must be done outside of Portugal in your home country. I think we're looking at the London, Manchester, and perhaps Edinburgh, depending on where you live. You would be a default assigned a particular visa centre. I think it's VFS that do the initial processing of the visa for the Portuguese embassy. An alternative one, if you wanted to come here and conduct business or establish some kind of business, perhaps create a small limited for doing whatever activity you plan, you would need to be looking at a D2, sometimes called an entrepreneur's visa. And the third is golden visa. This is all over the internet and certainly has proved very popular over the last sort of 10 years with here in Portugal. That essentially enabled anyone who was investing a certain amount in a property to automatically get a residency visa. It was more attractive to non-EU citizens, and of course UK and US are not now UK citizens, but EU citizens, what they have done is curtailed that significantly, so it rules out any purchases in very popular, more densely populated spots. Some pockets of the Algarve are still available, but mainly the typically popular areas for purchasing is now not covered by that golden visa. So it's less of a consideration at the moment, and there's no particular advantage to it. It really suited people who would be granted a residency visa without particularly spending a lot of time here. So it was very popular, for instance, with the Chinese, if we cite an example of one particular nationality. So it is potentially still relevant, but more than likely you don't want to be dictated by, the visa in terms of where you choose to purchase your home, if that makes sense. Hopefully it does. So about that visa system, as I say, you would apply in the UK, and you need to really allow 3 months for that. And your passport is taken from you for that processing for up to hopefully 2 months. It might take you a bit longer to gather the paperwork that's required in advance. So I've just penciled in there 3 months as a suggestion. When you get your passport back, it will contain a stamp, a visa in your passport. It will take up a page, and that allows you then to come into Portugal for two occasions, 2 entries, for a period of 120 days. And you would also then receive simultaneously an appointment to visit one of the immigration centres and get your biometric information recorded. And you get then a little residency card, a little bit like the green card in the US. It's, if you've seen stuff about this online, all the people that applied for a pre-Brexit residency card have not been granted theirs yet. We are now probably talking to you as post-Brexit applicants. Therefore, the visa and the card would be issued. So if don't be distracted by internet chat regarding those cards.
we should possibly skip ahead a little bit onto tax and
Yeah.
pensions and so on, as we will run out of time otherwise. Shall I skip forward?
Yes, please. Yeah.
Okay.
So tax, quite right, Chris. Very important. I've mentioned selling your family home. So if you do that, then CGT is not applicable. But if you do that whilst you're in Portugal, then you may have a liability. Also, certain investments would carry a capital gains problem there. Pensions. This is relevant to probably a significant proportion of listeners, and that warrants a separate slide. So that's coming shortly. Now, ISAs, PEPs, if you hold those, are not compliant in Portugal. ISAs, cash ISAs are okay, but big warning here, stocks and shares ISAs, they would be taxable in Portugal, and they're not respected. It's a UK rule, a UK tax advantage, and it's certainly not compliant in Portugal. They would look through, when you took the money out, they would look through not just that year or that year's profits, they would look through since you started the ISA, which for some people could be, there could be some quite significant gain there, which would be a problem. UK state pensions, you are going to tell, of course, you're going to tell the UK authorities that you've left, and they're going to pay you that gross without any tax withheld. And if you are, or if you have, or if you will remain with the UK assets, then getting a UK will sorted out is not a bad idea. Next slide, please.
Okay. Just to interrupt for a second, we have had a question. Someone who's been in the military and receives a military pension.
Yeah.
And that's taxed at source. So he just tells HMRC not to do that.
No. So good one. State, it's deemed like a state-derived pension, and it will be continued to be taxed at source in the UK. And it would be important to declare that in Portugal, but obviously it shouldn't be taxed twice. But depending on the level of the tax paid in the UK, there may be an additional amount to pay. So it goes under this DTA. If you look there, the second line, we've moved on to the NHR, foreign income. Under NHR, I know we've jumped subjects 0%, but if you like, if you've already paid tax on it in another country, then there's nothing more to pay under NHR. But if we're outside of NHR, and say NHR lasts 10 years, if we're in year 11, there could be potentially something to pay, because the income tax rates in Portugal would be potentially different to that, or are different to that in the UK. If that makes sense, yeah? So, talking of NHR, so that you might have heard these three letters comes up a lot. It's something that is a very, very useful tax regime. Although NHR stands for non-habitual residency, it's almost nothing to do with residency, so don't get that confusion. Be clear on the fact that this is almost an overlay to your future tax residency. It's like a golden hello for the first 10 years of your residency in Portugal. So what does it mean? Pensions, if they're not taxed at source, so again, we can instruct HMRC in the UK that you have left, and you can you file a form. You can do that online, and then there would be no tax at source in the UK, and they would be taxed at 10% here in Portugal. Okay, so foreign income. So let's say a military pension, or I think an NHS pension. Anything that is state-derived, including teachers, I believe it's the same. So you will have had tax, removed at source in England, in the UK, and then there would be nothing more to pay. It would be disregarded under NHR. Again, not the case when NHR finishes. If there is a disparity, if there is more to pay in Portugal, you would have to pay a little bit more to Portugal. If there is no more to pay, then that's good, that's fine. But Portugal is expecting you, if you've got an income over €8,500 a year, to at least complete a tax return. Foreign rental income. So if you decide to rent out a UK home, or indeed many of you have got buy-to-let properties in the UK, that income would be disregarded. Again, we know the situation in the UK, that is taxed at source. UK property has its own regime, and it doesn't matter necessarily where you are. You've still got to file your UK property. There is non-resident landlord form document that you need to submit to the HMRC before you come away, or soon after you've come away. Dividends, 0. So many people who've got small or even significant UK companies, they can get dividends as directors, 0 to pay under NHR. And if any of you have created anything that generates royalties, also 0. So yeah, next slide, please. Here we go. So pensions, focus on this. Very important. So it warrants the little yellow triangle. 10% on income. But here's the important thing. So pension commencement lump sum, the 25% tax-free, all great, yeah? But it's a UK rule. So don't wait until you are tax resident in Portugal to extract that money. It could be deemed taxable. There is, some question as to whether Portugal would find it or how Portugal treats it. But to be safe, the best thing would be to take that money out of your pension, perhaps use it towards the purchase of your property. If you don't need it, you can put it into a Portuguese compliant savings and investment structure. This is something I and Chase Buchanan would be able to help you with. But as to be cautious, certainly consider removing that, because that is a UK rule and not a Portugal one. Cure ops, you've probably mentioned, you've seen on the internet. Again, if you've been Googling about what to do with pensions, it's largely been ruled out now, this cure ops, which is a qualified overseas pension scheme. So we would be looking potentially to, consolidate and get things organised under an international SIP, but it would stay in the UK for the moment. There is discussions going on with UK pension trustees, and obviously the UK government's in a bit of a, I would say, what's the polite word? A little bit of a disarray at the moment with the, Chancellor of the Exchequer and the ex-pension minister. I don't even know who's in charge at the moment, and that's certainly evident with regard to pension rules. So watch this space. But for sure, international SIPs are a good thing to do, and potentially look at, as I said, consolidation of multiple pots, so that you've got one set of fees, you know exactly what's going on with it, and you can manage the investments and make sure your hard-earned money is being optimized. It can also be useful to plan for currency. Obviously, you're going to be spending euros. The pound has been volatile this year. It can be a useful tool to get that international pension SIP and know exactly what your euros are going to buy you, and for budgeting reasons, get organised in that regard. Next slide, please. So let's say you've arrived, you're meeting those professionals that I touched on that you've perhaps met, or you've even been emailing them from the UK. It's a chance to really get to know them a bit more. I would advise doing that. Portugal is a very sort of, I would say, personable country. They much prefer meeting in person and phone calls rather than emails and colder methods of communication. Sometimes it's good to get more attention for your needs and understanding face to face. NHR I mentioned. So this is the way that works. You would come here. You essentially become tax resident, certainly after spending 6 months here. What you need to do is apply for that before March 31st following your first tax residency year, right? And it's applicable to those who've not been tax resident before. So if you have had involvement with Portugal for some time, or you've been doing things before, or I've met people who've had little businesses here before in the past, they're the sort of reasons why this could be rejected. So you've got one chance. That's the note to take away here. You can also you've got to consider health insurance. There's two routes. There's the Portuguese equivalent of the NHS called the SNS, and there's private health insurance, which can be obtained relatively cost effectively. It's certainly popular here. The SNS is good and can be, can step up to the plate when required, but it can also be frustrating, and it is popular amongst expats and Portuguese alike to get a fairly sort of low-cost health insurance, so they can perhaps see like a GP when they want to see one. Apply SPF. That isn't a three-letter acronym for a government agency. That's the need to obviously apply copious amounts of sun cream for the wonderful weather we enjoy here in Portugal. Next slide. So other tick list items. So telling the HMRC that we've left, these are the forms. So the UK form is the P85, and as a DT. This is when you're sort of completing and wrapping up your UK tax affairs. So these are tick list items, just to scribble down. Consider, what you're going to do if you've got excess cash and you want to provide for yourself. Definitely, if you've got savings or lump sums available that you can put away for the future, and you don't want the full might of year 11 when your NHR runs out, you can establish a Portuguese compliant portfolio bond. They work a little bit like an ISA, I guess, not completely like an ISA, but it's as good as you're going to get here in Portugal. And it's be a good alternative for a soft landing in that year 11. I mentioned UK non-resident landlord. So yes, you're going to tell the UK that you've got a buy-to-let property and you don't want the tax withheld on that by your letting agent. That's what that does. They need to see a copy of that form once it's registered and you've received a notification back from HMRC. Right, UK driving license swap. This is brand new as of this month, August 2022. You used to have to swap your UK driving license for a Portuguese one. It's now not needed. There are a few occasions when it still is needed. But if you're under 60, you've got a valid license and you're from what's known as an OECD country, which is the main European countries, then you don't need to swap anymore. Not sure about where. I think you'd still do if you're a US citizen. Right, UK residency tests. So this is, we are optimizing our tax footprint. We're leaving UK. We're taking the maximum benefit of doing that. We're coming to Portugal. We're being smart about the way we operate in the new country. When we become tax resident in Portugal and we get all the wonderful benefits of NHR, we've got to be careful not to be deemed tax resident in the UK again. So another tick list item, just it's too detailed a subject to go into here, but just be careful about how many days you spend back in the UK. Okay, UK will, yes, you'll also might consider a Portuguese will as well. Lasting power of attorneys might be useful to do before you come. And cars are expensive here in Portugal. Some people will bring a car, but a lot of people think it's probably not worth it, and you've got to bite the bullet and buy a Portuguese car. They just are more expensive, double or even sometimes I think 3 times the price of an equivalent UK car. Don't ask me why. Again, too much for this presentation, but it's an item that you perhaps need to look into. Yeah, so we're over time. So just quick summary. We've talked about leaving the UK. This is for all the people that are really jumping in with 2 boots and want to be outside of that 90-180 rule. Do have some time and patience. One of the sort of cons is the Portuguese authorities are a little bit slow sometimes, and they're a bit backlogged, especially with all the Brits that applied to be resident as a result of Brexit. But do relax and let professionals do the legwork. And if you need to contact, sorry, Chris.
Thank you. Let's not worry about 5 minutes. 5 minutes over. We've got all the time in the world. So we haven't really got time for many questions, but you got Phil's details there. So do please contact Phil directly. I mean, we've had all sorts of questions about. Here's just one to answer quickly from Andrina. If I stay resident in the UK, what tax do I pay on Portuguese rental income?
Yeah, so there's a couple of regimes. You can pay like a flat tax, and you can do a more sophisticated tax. It's a little bit like the UK system. It's too vast a subject, but let's say around 10%, okay, on the flat tax basis.
Okay.
All right.
Okay. Well, I think most of the other questions we got answered already within the presentation. So, just to tell our visitors that flashing up on the screen will be an invitation to our virtual event, which is not for ages. It's in November, although we are almost in September. So it's time to start planning your escape from the winter. So there's that coming up in November, and you can watch this presentation again and catch up with the slides and do screen grabs and all sorts of things on demand. We do strongly recommend that you get in touch with Chase Buchanan to discuss your requirements in detail. There's nothing worse than not organizing something in advance, and then you make some big mistake and you end up having to pay thousands too much in tax. So do please get organized early with your tax affairs. So thank you to all our visitors for watching this session. We wish you the best in your move overseas, and thanks again, and happy property hunting. Thank you very much.